Hi, this is Sam here with the Bulletin Board Heroes here at Vox Markets for Monday, the 28th of November. Starting off with the FTSE 100, where we've had a wobble with the events in China, where the read across obviously not that great for equities given the importance of the economy there, but we bounced off that uptrend line there from October. I suppose a slight overshoot, looking for 73.30. The low was 73.20 so far, but at least while there's no end of day close back below that uptrend line, we're still trying to squeeze higher and above that 7400 area. Really still looking for 7750 or so by the end of the year. If you're cautious, you'd wait on an end of day close through 7500 to then assume 7750 was on its way. Below 7420, the risk is down to the 200-day moving average at 7320 or so. Moving on to the DAX, which has been one of the better movers of the recent past, but here also topping out on that China situation. We've got support there around 14,300 and above that, still looking for a potential move to the upside, so that would be up to 15,300. Below 14,300 risks the 14,100 area. And if you're cautious, you wait for 14,600 plus before targeting 15,300. The Dow is obviously reflecting the situation on Friday. So here we've got our sort of notional stop loss area, 34,000, which was the initial peak in November. Above that, looking for basically 36,000 by the end of the year. But if there is a dip today, then probably only below 33,300, really upsetting recent positive build-up. On to Bitcoin, which is still causing lots of anguish, I would say, with people. Here we've had a situation where the bullish divergence only really worked for a few days last week, and we seem to be rolling over again now below 17,000, and below 17,000, which is recent resistance. The risk of not only a test of 15,600, the lowest since the FTX debacle, but also a potential move down towards 13,600, which is that June support line projection. You see that since the lows were put in earlier this month, the RSI has never really been above the low 40s. You need it to be above neutral 50 really to turn this around, especially with the 50 and 200-day moving averages both still falling sharply at the moment. On to the stocks, and starting with Aminex, which has been a stock which we've been eyeing up on the bull side with the break of that resistance line there from back in October around 1.1 pence. The implication was a bit of a retest of the 1.4 pence area. You could maybe upgrade that up to 1.6 while we hold above the 1.1 pence area, but still a bit fiddly on that. And we've also had a gap fill sell-off so far, so we want to see these shares back above 1.25 to try and cancel out that slightly negative development. Negative developments at the moment in the near term for critical metals, actually hitting the top of that rising trend channel from September, which I drew very recently. I think it was probably the last time I looked at it, maybe even yesterday. Situation is that we could still head higher towards the top of that channel, or at least that September resistance line projection as high as 40 pence, while we remain above today's support around 28. So above 28, still looking for 40 on critical metals, and that might be seen by the end of next month or possibly even sooner. Moving on to a stock which has been flatlining for quite some time, Ferro alloy, and here what's interesting is that we've managed to break back above former July and initial September support around 11.5 pence. Above that, we're looking for the shares to fill the September gap up to 15.5 pence over the next 2 to 4 weeks, perhaps even sooner. Stop loss and end of day close back below the 50-day moving average, currently at 11 pence, and we've been backed by bullish divergence over the last couple of months there in the RSI window. Also on the front foot at the moment is Genflow. We were anticipating a break higher after that trendline break back in the middle part of this month, around 1.9 pence. We had a sort of initial false dawn spike through the 50-day moving average, but the V-shaped bull flag has now come through for bulls of the stock, and above 2.9 pence, looking for that resistance line there from July as high as 4 pence over the next week or two. Mr. Stock, which has had a pretty decent setup here in the form of Horizonte. We gapped up the week before last through the 50-day moving average, and top of the gap there at 98 pence. Above that, we've got a V-shaped bull flag, and we could head up to the August resistance line projection there at £1.22 over the next 2 to 3 weeks. So looking pretty encouraging there. Helium one of the more followed stocks around, and here I suggested that we need an end of day close above the 200-day moving average, 8.3 pence. We might get that today. If we can get that today, then we could head towards the 11 pence area over the next couple of weeks. And at this stage, only really an end of day close back below 7.5 pence, and the floor of the recent flag delaying the upside scenario. The rally here started with an unfilled gap to the upside, so hence the excitement in relative terms. Moving on to IOG, which broke the resistance line there from August early this month, but the real action now is the break of the floor of that gap there. 14 pence above that we're looking for, not only to, well, we've already filled the gap really up to 19 pence, but up to the 200-day moving average at 28 pence by the end of next month. And this, I think, also is a gap, unfilled gap to the upside higher there from Friday, so looking pretty strong there for IOG. Lots of positive noises on Twitter regarding Oxford Biodynamics. That's not always a golden thing to follow, but so far we've had a bear trap island reversal, and we've had two gaps, well, at least another island reversal actually in the last few days. So two island reversals make this rather strong and make us feel that we could head up to 35 pence on any end of day close back above 23 pence, which is post October resistance, and 35 pence may be seen by the end of next month. More news, or good news, from Rockfire, and here we've got gap higher, breaking recent neckline resistance at 0.17, above 0.17, looking to fill the gap there up to 0.25 maybe by the end of the year. This rally started with bullish divergence back in October after the placing that the company delivered. Moving along to the last three, and first one is Scancell, which I covered yesterday, broken through the initial target there at 23 pence, and above that looking for the top of a rising trend channel from back in the beginning of last year, as high as 35 pence or 36 pence by the end of this year. In fact, that looks like that's pointing to 37 pence. So a very strong situation there. One of those unfilled gap to the upsides as well. So very strong setup there for Scancell. Moving on to Tern, which I think the bears have at least gone quiet about knocking for a few days at least. Here we've had a gap close buy signal, which we had on the 14th of November. Sideways shuffle above the 50-day moving average since then, and an end of day close above recent resistance at 9 3/4 should be enough to get the shares up to the 12 pence area, which is basically post-August resistance over the next couple of weeks. Nice follow-on move for U Group, even though it's come up a long way, now a gap to the upside. We're in this broadening triangle, and I think I said previously that above the old resistance, the initial 2022 resistance around £3.25, we could head up to £4.50. That seems more likely now, especially while there's no end of day close back below the top of today's gap at £3.64, so above 3.64 now on an end of day close, looking for £4.50 over the course of the next few weeks. That's it from me today. More updates tomorrow.